CPAs, the CPA firm for real estate professionals, because we help our clients save thousands in taxes each year. Today, I want to talk to you about payroll timing. I had another client come through the door this year, saw a prime example for this. So just here to share it with you guys. What this is all about is just stop paying the IRS early, right? Stop tipping the IRS, put your money to work throughout the year, pay your taxes in as late as possible so you can earn as much interest as possible or business income as possible through putting that money elsewhere in your business to make more money instead of paying the IRS. And, if you're not paying in quarterly estimates, you're also paying penalties and interest on those late payments, right? And even if you have a spike in income, you're supposed to pay in your quarterly estimates based on your income throughout the year, right? Paid in every quarter. Hopefully you're all familiar with that. It's a requirement. So this becomes really applicable we have a couple of clients that are commercial real estate brokers. Their income can be a little bit more sporadic. They can make a $400,000 commission in January and then go without for a couple months, right? So that might ramp up or make that first quarterly estimate very significant. And if that's the advice you're given from your CPA, is, hey, let me see your profit and loss statement. Okay, this is how much we have to pay in quarterly estimates. And they're not doing any sort of strategic planning for you. I highly encourage you either reach out to us or another more proactive firm to help you better manage your finances. Because honestly, this is just a base hit. And this isn't just for our higher income earners, right? It's applicable through all stages. We have clients who are they're making like 150,000 in commission, that they're an S corp for the self-employment tax savings, and we'll still employ this strategy just so that they can keep their money a little bit longer, help it earn money throughout the year, pay the IRS at the end of the year. So when you're a sole proprietor, right, you're, like I just said, you're required to pay in quarterly estimates. So either you're paying in your vouchers that your tax preparer from the prior year gave you, or you're looking at your net income and making estimated tax payments on that. We have clients that are making $500, $700, $900,000 a year, paying $250,000 plus in taxes. I mean, these quarterly estimates are 60 grand plus to the IRS. So how do we get that money to remain in your pocket and then pay it out to the IRS at the end of the year? So when you're a sole prop, you don't have a lot of wiggle room, right? When you're an S corporation, you have to pay yourself a W-2 salary. So what this allows us to do with payroll timing is we can pay in a very small amount of payroll in, January through November. Then in December, know exactly what your net income is, or pretty close to what your net income is going to be and how much you're going to owe in taxes. We haven't paid in any quarterly estimates throughout the year. We've paid you very little payroll throughout the year. And now in December, we're going to finalize our strategy that we've been working on throughout the whole year. How much are we putting into a solo 401k for yourself? How much of a company match are we getting? How much do you want to put in retirement? Because we might have to ramp up your W-2 earnings if you want to, put $70,000 into your solo 401k Roth, right? So we kind of solidified the plan we've been working on throughout the whole year in December. And then in December, we run a payroll amount and have extra withholdings on your W-2. So we don't just run the payroll based off of the wage tables. We pay in even extra on your earnings, because when you're an S corp, right? If you make 100,000, if your S corp has 100,000 in net income and you pay yourself a W-2 salary of 50,000. If we pay you 50,000, whether it's December or throughout the year, the wage tax table is going to withhold federal and state taxes for $50,000 income. But your S corp still has $50,000 sitting in it that most of our clients are taking as a distribution. Well, those distributions you have to pay quarterly estimates on. Okay, but the route I advise a lot of my clients to go, and what we help execute, is let's pay in little payroll. Let's pay in no quarterly estimates. When we pay you a W-2 wage, let's ramp up the withholdings on your W-2 wages, because there's a safe harbor rule with the IRS that your W-2 wages, doesn't matter when they're paid, they're considered to be spread out through the entire year. So we're missing these quarterly estimated tax payments, but it doesn't matter because we're going to pay you in W-2, we're going to pay you and have extra withholdings to cover those distributions. So you technically don't have any sort of quarterly estimates that you would have needed to make because you've withheld enough through your payroll. I hope that makes sense, but like with 1099, you have to pay it as it's earned. When you're a W-2 employee, it doesn't matter when you're paid throughout the year. They even it out throughout the entire year, right? So it's just a timing play. So the client I was talking about earlier, when they came to us, they had I think I said it earlier, it's like $300,000 in commission they made in January. And then they put like 100K plus into their quarterly estimate for federal and state taxes. Whereas if they would have just put that money into a high yield savings account, earning 5% interest compounded over the entire year, right? You're talking like $10,000 in interest income. Or the person, I mean, what I personally like my clients to be doing is putting it back into their business, especially if they're tracking their KPIs and they know, like their business is more predictable because they're tracking their outreach and their marketing efforts and they know their close rate. Hey, if I throw this $100,000 at, this marketing channel, I know we're going to get this much more in commission. That's going to outpace 5%, anyways. One caveat with this, like I'm not recommending you to go into S corp. It's something that needs to be considered on a client by client basis. Another thing you'll want to do is put it into something that's safe and predictable. High yield savings account, a T-bill, back into your business. If it's predictable, you know your KPIs, the numbers that you're hitting. It's just a matter of cash flow. I'm okay with you putting it back into your business. That's usually what I recommend, as long as you have a good financial management um, base, right? One thing I would not recommend: do not throw it into like a stock portfolio. I get that question a lot, but the stock market's unpredictable. I don't want you to put 100,000 in January and then it's worth 50,000 in December, and now you're like, wow, I just lost 50 grand and I had to pull this out to help pay for my tax bill, right? You don't want to be doing stuff like that unless you're trying to utilize some losses in a stock portfolio to offset your other passive income sources. But that's going off on a tangent. But you know, I just wanted to throw this out there. It's something I saw. I'm trying to get more consistent with hopping on here and making videos. Hopefully gonna push the videos around on the internet a little bit more, because at the end of the day, I'm not a real salesy guy, but I need clients that I can help. That's the way my business runs. So just trying to put myself out there, meet as many people as possible, and help support your growth, and in return you'll be helping support mine. So if you need any help with tax planning, financial management, finance in general, anything like that, please be sure to reach out to us. We'd love to help you. We specialize in real estate, rentals, brokers, agents, you name it. We focus completely on real estate. That is 100% of my client base. Reach out if you have any questions or need help. Thanks.